We found an amazing trend-following strategy that has a really high success rate. It's super easy to use and can make you a lot of money. This strategy uses a better version of the RSI indicator that gives really accurate signals for buying and selling. To prove it works, I'm going to test it out 100 times with $1,000 to start. But before that, I want to introduce you to our backtesting service, as it makes it very easy and saves you time when backtesting your strategy. Thousands of traders are using Trader Edge to get an edge on their competition. It also has a lot of features that would definitely take you one step ahead of your trading career, just like the position calculator that serves as a great tool for risk management. Are you not sure how to backtest? No worries, you will also get a full step-by-step backtesting plan which has a $100 value. Not sure how to build a profitable trading strategy? No worries, you will also get a full course on how to build a profitable mechanical trading strategy, which has a $270 value. And if you sign up right now, they'll even throw in for pre-made high-quality strategies that have a $100 value. That's for $170 worth of bonuses, all for free. But only if you sign up right now. Trader Edge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below. Now that we have covered the basics, let's move forward. Our first step is to go to Tradingview. We will be showing the strategy on the 30-minute chart, just like you asked for in our previous video. Now, let's add the indicator to the chart. First, we need to add the improved RSI indicator. Look for the indicator search tab and search for the trend strength directional indicator. Take the one made by Bunhole and add it to the chart. Next, let's adjust the indicator settings to make it work well with our strategy. Go to the Indicator Settings tab and click on the Style tab. First, change the light wave to a line and uncheck the dark wave, the MFI area, and the MFI line. Then, scroll down to the upper level and change them to a line. Do the same for the lower line. And that's all we need to do to set it up. Now, let's see how we can use the indicator. This indicator is very powerful, but to keep it simple, you can think of it as a signal generator for buying and selling. When the indicator shows a red signal above the upper band line, that means it's a sell signal. And when the indicator shows a green signal below the lower band line, that means it's a buy signal. Let's take a look at some possible trades we can make using the indicator. If you look closely, you'll see that the blue moving average is below the lower band line. This means that the market is in a bearish trend and it might be oversold. But here's the interesting part. We also have a green dot below the lower band line, which suggests that the bearish trend might reverse soon. When we see this dot below the lower band line, it's a sign that we should consider buying. And that's exactly what we'll do in this case. We'll enter a buy position. To protect ourselves from potential losses, we'll set a stop loss at the recent swing low, and for our profit target, we'll aim for a reward that's 2.2 times greater than the risk we're taking. Now, let's see what happens with this trade. Now let's move on to another trade opportunity. This time, we notice that the trend strength moving average is above the upper band line. This means that the market has experienced a strong bullish momentum and it might be overbought. And guess what? We also get a new rate signal above the upper band line. When this happens, it's a sign that we could consider selling. So, in this case, we'll enter a sell position. Again, to protect ourselves, we'll place a stop loss at the recent swing high. And for our profit target, we'll aim for a reward that's 2.2 times greater than the risk. Now that you understand how the indicator works and see how it helps identify overbought and oversold levels, it's important to know that relying solely on these conditions for trade entries may not be enough. While oversold and overbought conditions can suggest a possible price reversal, they don't guarantee it. Sometimes markets can stay in these conditions for a long time, especially when there's a strong trend or momentum. To overcome this challenge, we can make some improvements to the indicator to reduce false signals. One way to do this is by adding a third band line to the indicator and setting its coordinates to 0. This additional line will provide us with more reliable information. We can also add another indicator to the chart to further enhance the accuracy of our signals. To make these changes, go to the Indicator Search tab and look for the Profit Maximizer PMEX. Choose the one developed by Kivankos Bilgic and add it to the chart. After that, let's optimize the indicator by adjusting its settings. Open the Settings box and find the Style section. Uncheck these three specify options. You can also slightly increase the uptrend highlighter and do the same for the downtrend highlighter. Once you're done, uncheck the remaining boxes. By making these modifications, you'll notice that our chart becomes clearer and easier to understand. This will greatly help us in analyzing our trades and making more informed decisions. Now, let me explain how we can use these indicators to filter out many false signals that the TSD indicator produces. The Profit Maximizer will act as our trend filter indicator. It helps us determine the overall direction of the market. We will look for buy opportunities when the price is trading above the PMEX moving average. This suggests that the market is in an upward trend. On the other hand, when the price is trading below the PMEX moving average, we will consider selling because it indicates a downward trend. By using these indicators together, we can make more informed decisions and avoid unnecessary trades based on false signals. However, it's important to understand that this strategy may not work well when the market lacks momentum or isn't moving much. During these times, we tend to focus on short-term trading for buying when the market is going up and looking for opportunities to sell when the market is going down. The main objective is to maximize our profits. By carefully choosing which trades to take based on specific criteria, we pay close attention to certain signals that appear as green dots in the lower channel when the market is going up, and as red dots in the upper channel when the market is going down. By following these signals, we increase our chances of making successful trades and earning profits. Let's consider a situation where we have a new bullish trend. If we only took trades when we saw the green dot in the lower channel, we would have had more winning trades. This emphasizes the importance of selecting the right signals to improve our trading results. Now, let's discuss how we actually execute trades using this strategy. It's crucial to prioritize the signals that have a higher probability of success, while also considering the information provided by the PMEX cloud. By taking into account the PMEX cloud in our analysis, we can avoid taking trades based on weak signals that may not lead to profitable outcomes, especially in a trending market. To establish a valid short position, we need to meet certain conditions. First, we look at the PMEX indicator and check if the red line crosses above the blue PMEX moving average. This indicates a downtrend and creates a bearish cloud. Second, we wait for the TSD moving average to cross above the middle band line during a temporary reversal in the trend. Third, we keep an eye out for the red label signal on the TSD indicator above the upper channel. The fourth step is crucial as it involves comparing values. We want to make sure that when a valid signal appears, the closing value of the candlestick is lower than the PMEX moving average. If the PMEX moving average value is equal to or higher than the closing value of the candlestick at the signal point, we avoid that signal because it's considered an inside cloud signal. Fortunately, all the necessary conditions for this trade have been met. The closing value of the candlestick is lower than the PMEX moving average, which means it's a valid entry point. So we start our trades at this point. We set the stop loss using the red moving average, which considers the average true range. Our profit target is to gain twice the amount we risked. Now, let's assess how this trade performed. While our trade was in progress, we received another signal on the higher channel of the TSD indicator. However, this signal is invalid because the closing value of the candlestick is higher than the PMEX values. Therefore, we avoid taking this trade. Shortly after that, another signal meets our entry conditions. The signal appears on the upper channel of the TSD indicator, and our PMEX indicator still shows a bearish trend. The values align with our entry rules, so we open a position at this point. Once again, we come across a valid signal that meets our entry criteria, prompting us to enter another trade. As you can see, this strategy successfully avoids one losing trade and secures 3 winning trades. Moreover, if we had waited until the end of the ongoing bearish trend, we would have had 2 more wins and 2 losses. Overall, this outcome is favorable because we gained twice the amount we risked in the market.
Now that we have a good understanding of how the strategy works, let's test it out and see how it performed when trading the euro against the pound. I started with around $1,000 in my account and risked 2% of that amount for each trade, with the goal of making a 4% return. The win rate for this strategy is quite impressive at 61%, especially considering the 30-minute time frame. Over a period of 13 months, I made 100 trades and ended up with a profit of over 166% in my account. The profit factor, which indicates the success of the strategy, was 3.13, showing that things went really well. However, I want to stress that you shouldn't make investment decisions solely based on this advice. It's important to practice first using a demo account before you start trading with real money. This way, you can get comfortable with the strategy and build up your confidence. By doing so, you'll have a better chance of achieving similar winning results, especially when the market is experiencing strong trends.
By the way, if you want to explore the strategy with the highest win rate on the channel, be sure to check out the spreadsheet mentioned in the description. It has more information and insights that you might find interesting. If you want to stay up to date with my future strategies, make sure to subscribe, because in my next video, I'm planning to release a strategy that works even better with some of the indicators mentioned in this video. Hope you guys all learned something from this video, and I'll see you guys next time.